To the floor show, economist John Lonsky of the Lonsky Group is here, along with Carnivore Trading's Dutch Masters. John, did Powell basically just signal no rate cut at, forget the May meeting, the June meeting?
Okay, I think what he's signaling is that we need to see further signs of disinflationary weakness or softness in the economy if the Fed is going to go ahead and cut rates on June 12th. We had a few favorable developments of that sort. We did get this weak reading on services from the ISM. We also had the lowest prices paid index from the ISM in more than 3.5 years. And I will add that in the month of March, unit sales of cars and light trucks seem to have dropped by about 3.5% from the prior month. And they rose by less than 3% from a year ago. The economy is slowing down, and that, again, preserves the possibility of that widely anticipated June rate cut.
John, let's look at the two-year yield because it most closely follows or tracks what the Federal Reserve is going to do possibly. Now, it closed yesterday at 4.7%. Then earlier today, I saw it at 4.73%. This one continues to climb here, except that since he spoke at Stanford Business School, and it was a Q&A, he came down, at least he brought this down about to 4.685%. So we are at the lows of the session for the 2-year. What should that tell investors about equity investing?
Well, that tells equity investors that perhaps these affairs of earlier this week that the Fed would not be cutting rates on June 12th were overdone. Still, that being said, that 2-year Treasury yield you cited was significantly lower a week or two ago. So there is much more uncertainty as to whether or not the Fed cuts rates in June than there was several weeks ago, and that's still going to weigh on market performance. And I can't help but add, as I said earlier, the Fed is not going to be cutting rates unless we have some convincing evidence of a softer disinflationary economy. That would tell me that the rates of growth for consumer spending have to slow down, and more importantly, we're going to have to see smaller additions to payrolls. The prediction is that we'll have 200,000 new jobs in March. That's still too high for a Fed rate cut. Yeah. We need to have that monthly increase perhaps approach 175,000, 150,000.
Well, we'll know Friday when that number comes out. Let me get to Dutch Masters. Dutch, you're 60% in cash. When we're looking at the S&P right now, year to date, we're seeing a gain of about 9%. Year over year, up 26%. What are you waiting for? A big pullback?
Well, we had a fantastic January and February with biotech. Carnivore's model portfolio is up about 130% year to date. We like to roll with whatever sectors are really showing us the strength. So we're pretty much out of the biotechs except for, and I have to say, there was huge news today when COSTCO said that they're going to be offering the weight loss drugs to select customers at $179 for the first 3 months.
Whoa.
This is huge. Now, we've been pounding the table on the fact that the weight loss drugs by Lilly and Novo Nordisk are really taking the world by storm. And for the first time ever, Planet Fitness actually had more people stop subscribing in January than actually subscribe. So, I mean, this has never happened in history, okay? So we think that this is a massive disruptive drug technology that has a lot of legs. And after all, the government likes to talk in the word trillion. So let's call it $1 trillion opportunity, right?
Wow. Okay.
Dutch went on this himself, speaking in the third person, of course, in September of 2022, lost over 100 pounds, had no real side effects. So this is the real deal. So the sector that we are rolling into now and moving into is really building, construction, and infrastructure. So.
Well, you didn't lose any brain power considering your gains year to date. Let's look at infrastructure names, and you specifically mentioned CAT, you like road. As we pull these up, I do need to bring in John Lonsky back to the conversation because, John, infrastructure spending arguably strengthens the economy, or at least the jobs market, as laborers have to be hired to do this. I mean, we think about this horrific situation in Baltimore with the bridge collapse. Already they have, I would venture to guess, more than several hundred people working on this right now. Does that tilt the rate cut in any way, shape, or form, one way or another?
Well, you know, what's happening in Baltimore is also going to put upward pressure on product prices because of supply chain disruptions. And we have a full employment economy. So it doesn't take much of an increase in the demand for labor to put upward pressure on wages. And that is something the Fed worries about. Are we on the cusp of going through an episode of wage-driven inflation? You simply don't have enough room to grow this economy, given the fact that we are already at full employment. I want to add, construction spending, outside of, other than residential construction spending, the strongest component has been construction spending on manufacturing facilities. Believe it or not, last year it was up by 71% in dollar terms year over year. Why was that? That was because of government subsidies and tax breaks that aim to spur the production of microchips as well as green energy related products in the United States.
I'll tell you something, there's a lot of action, and one thing is for sure, the market is really holding up quite well. And to that end, I'm talking over the past several months, to that end, when you pair that with the strong labor market, I do not see 3 rate cuts, but we shall see at least by the end of this year. Yeah. Good to see you both. John Dutch, always a pleasure.
Thank you.
Thank you.
Thank you.
The Mouse House has just escaped the biggest trap in years set by an activist investor. The Disney board was teetering on the galaxy's edge as the Star Wars parent drew its lightsabers in an all-out proxy war. Our Countdown Power Panel is here next to break down today's shareholder meeting, the crucial vote, and the future fallout. Disney stock. Let's take a look at what and how